Welcome to Joe Kidogo and Associates. My name is CPA-K. One of our growing department in our organization is Company Secretary Services, and we got it twice. It's good we roll out our services, and today we want to talk about the entities that are registered through the Registrar of Companies or through the Attorney General in Kenya. And we want to talk about the Limited Liability Partnership or LLP, famously known as LLP. This is an information of partnership that is coming up in the recent past from the Partnership Act 2011 that was introduced. And we want to talk about the LLP and Limited Liability Partnership, or commonly referred as LLP, are a unique form of businesses associated that blends legal protection elements of the company and those of a partnership. So it is both a combination of a company's formation and a partnership that are blended together to form an LLP. Upon registration of an LLP becomes a body corporate that is with a legal personality separate from its partners. It is governed by the Limited Liability Partnership Act 2011. What are the key characteristics of LLP? The first one is a separate legal entity. An LLP can own property, can sue, and can be sued on its own name. This is just like a limited company, and is differently from a partnership, because we know that a partnership, the partners are the ones who goes with the liability of the partnership. But an LLP, as how we've said, it can own property, it can be sued, and it can also sue on its own name. The second is a limited liability. Partners are only liable upon the amount that they have invested. Personal assets are protected. So it has a limited liability, just like a limited company, that the partners are only capable for only the amount that they have invested from the LLP, and that their personal properties cannot be sued or be taken to cover maybe debts that may incur to the LLP. And also the third one is that it has flexible management. Partners decide how to run their business through the LLP agreement. And the last one is a perpetual succession, that an LLP continue to exist even after partners change. So we know that once the partnership, once the partners maybe leave or changes, the partnership ceases to operate. But for LLP, it has a perpetual succession, that if a partner leaves or changes, maybe you change a partner, the legal entity LLP still continue to operate. As what is the structure and membership of an LLP? In terms of if you want to form an LLP, what are the criteria of formation of this LLP? So the first thing, you need to have a minimum of at least 2 partners are required. The second one, you need at least 1 manager. So when you have an LLP, the difference is that you have 2 partners and also 1 manager. It is key to know that everyone is a natural person. The manager must be a natural person, 18 years and above, and must be a resident of Kenya. So the other one, the LLP has no maximum limit of number of partners. You can go to as many partners as you want, but as how you highlighted up there, you need to also have 1 manager who manages this LLP. The other one is that partners act as agent of the LLP when authorized. So the partners can act as agent when authorized. Also, let's talk about the registration requirement. What are the registration requirements of an LLP? So the first thing that you need to come up with, if you want to register an LLP, you need to come up with a proposed name, and the name must end up with LLP, Limited Liability Partnership. The second one, you need to give the nature of the business that you want to have. And also the third one, you need to have the physical address, the street code number, town, or the county that you need to register this LLP. The other one, you need to have the partner's detail, the ID, the KRAP, the photos of all the partners need to be given. The other key document that you need to give is the manager's consent letter. The manager that you're proposing to be part of this LLP must give a consent letter. You also need to have an LLP agreement that outlines the roles, profit sharing, and management. This is like when you go to the partnership deed, but now at the LLP, you talk about the LLP agreement. This outlines the roles, profit sharing, and management, as how we talked about. Also, the other one, you need to come up with an LLP 1. This is a form that you get from the Registrar of Company called a form LLP 1. This is the statement of particulars that gives the details of the LLP. The last one is that you need to come with the registration fee. If you want to know more about this, kindly consult us so that we take you through the registration of an LLP. What are the advantages of registration of an LLP? that there is no double taxation. The partners pay their tax individually on their share of profit. The other one is that there is customization structure. Partners defined their own rules in the LLP. And the other one is credibility. The LLP are recognized as form of business entities. The last one is that ID for business profession, especially the use of law firms, consultancy, and accountant practices. We have seen that this is a way that consultancy firms are going into LLP. Mostly, initially we have sole proprietors and partnership, but this is a route that we are seeing professional firms like law firms, consultancy, and accounting firms like ours going to the roots of the LLP. What are the considerations? You must maintain an annual solvency declaration. Change in partners structure must be reported within 14 days. So if partners are to change, this one must be reported to the Registrar of Company within 14 days. And if one partner exists, the LLP must recruit another partner or convert it into a different entity. So if a partner is existing, the LLP has the limit to recruit another partner or to convert it into another form of entity.